What's up, guys? It's been a while, and here I just want to quickly show you guys how to find ICT's 30 seconds model, like just the drawn liquidity or the liquidity where you're going to be reversing from, which is kind of the key to is just finding that 15-minute bias and then dropping to the 1 minute, waiting for that structure to change or the liquidity sweep. And we'll go over what is a liquidity sweep and that structure change and how to find the liquidity that you're gonna be hunting or aiming for. Just to recite, ICT has not made a video on this, and this is I hope to be like an educational video where I show you guys, the drawn liquidity, and then what you're gonna be looking for. You're gonna look for the sweep, and then to aim for your drawn liquidity. All right, guys, let's get started. All right, guys. So I quickly just denoted these relatively equal highs here from yesterday's session. And if we want to put the bracket so we could see New York midnight divider right here. But yeah, so we have yesterday and we have today. We left relatively equal lows and relatively equal highs. We kind of came down, came up, so it's liquidity there. And that's what we swept today at. We swept 2 a.m.'s low. I wasn't in the market because I wanted to see this, obviously. But we could see the structure, how the structure changes. Some good, great entries today. But also, if you notice that we did actually sweep those relatively equal highs. So you had one opportunity and then two opportunities to get into a 30-second market structure shift and ride this bad boy down. So just off of this, just basically you could put on your notes relatively equal highs on the 15-minute, relatively equal lows on the 15-minute, double bottoms, double tops are the best. If you want a high probability drawn liquidity, these are the setups you want to look for. Relatively equal highs. We have a high here and we have a high here. Let's look at the pip. Pips are five handles apart right here. Imagine five handles. Five handles apart. So relatively equal highs, relatively equal lows. In New York session, relatively, hopefully. And you could also use this. Look. So I had if let me quickly show you what I had before. So basically I had this as my drawn liquidity right here. We had a double bottom. This was for yesterday's. We had a double bottom here. And we also have a double bottom right here. Boom. So these are all setups that offered an insane result. This right here, once we swept it, there was a swing low right here on the 15-minute. Note at 9:30 we came and swept that. You can go in your 30-second chart, enter in whatever your model says. You could wait for a market structure shift. You can enter off the first fair value gap, like ICT suggests. First fair value gap would have printed an insane amount of returns. You know what I'm saying? But you can always switch. If ICT says enter out the first fair value gap, you're not gonna enter until you see a market structure shift and then a breaker. You know what I'm saying? So you make sure to just back test and see what works for you. But would have gotten some nice results here. Boom. Then you would have had this double bottom. You would have had some nice results here. Notice that once we swept this, we immediately came above the liquidity. That's exactly what you want to see. And I'll show you the proof that actually predicted these setups here. All right. Unfortunately, since I'm recording this on TradingView, you can see right here, I can't really go into another tab. Or I can, but I don't want to like just mess up with the recording and stuff like that. I've already been doing this. Relatively equal highs, double bottoms, relatively equal lows. That's basically kind of it, all you really need. And I'll give you another one just because if you guys really want to trade every day, then no props, no props. See, okay, so just making sure I got the keybind right. So we're gonna look for 9:30 on the 15-minute. And then we're just gonna quickly see what is the swing, what is the nearest swing low to 930, like to the left. What is the nearest swing high to 930? So when you go to 930, market is about to open 925, let's say. Go on your 15-minute chart and you see what is the nearest swing low. We have a swing low right here. We have a swing low right here. This swing low is touching this swing low, basically. So this is the swing low we're going to be using. So this is swing low. Market goes below here, and then nice reaction, comes back above, comes back above. You can definitely get some 30-second action in here. We don't even have to go into the entry fractals. I just kind of want to prioritize in like the most important stuff. This is swing, the drawn liquidity, and where your reversals are going to be, um, and or where you anticipate the drawn liquidity to be. So let's just, that was one example, and notice how there's no real swing highs, but that believe here is only swing high. So this will be your draw if you want to go and see a fractal play out, and a reversal of that. Let's go to the next day. So go to 930. Right here. So 930. So 930 right here. Boom. Okay, but 930. So where's the swing low? Swing low to the left. There is no swing low to the left. Besides over here. Um, and I'm not even gonna count this because this is not what I would use in my. If it's not like at least a day before, it was 2 days before. You could also use a daily high and low on those type of results to see if you can get like a quick move reversal type of pattern. And we're just looking for 1 to 1s or 1 to 0.8. So finding these little like high probability areas is important. So let's just go to the next example. All right, just to recap before we go, the drawn liquidity that I suggest is relatively equal highs, relatively equal lows, double bottoms, double tops, and before market open, swing highs and lows. And now we're going to go into the 1 minute or 5 minute sweeps that are going to generate a reversal from. All right, guys. So I'm gonna just walk through this price and using ICT's 30-second chart. We're gonna quickly just put a Fibonacci or a retracement to see the discount and premium, and I just want to use this just so I can aim for. Um, if you knew that today was gonna be a choppy day, which I kind of did know because of there's I think like 6 red folders tomorrow. Like could chop around, and we did chop around. Ended up gravitating to the upside. Um, so how do we find, like, since we are in the premium range, let's say over here. So like we're in the premium range, the draw is like super super close. How do we find to make sure that we're actually going to get into that position? And I'll also show you that like right here. Here we had market open 9:30. I don't trade before 9:30. We dropped down, we had an accumulation. Then we had um, a manipulation. Well, we had an accumulation. This is manipulation. Sorry, manipulation. Another accumulation right here. Then we have the rally. So why we didn't go down here is because we already was accumulating. In the 1 minute we accumulated, manipulated, and then we set it up more longs here. Um, but yeah, so how do we frame the ICTs little like liquidity sweeps to see where the 30-second chart is going to go? Because you first want the draw, which is here, and then the second part is you want a 5 minute or a 1 minute liquidity sweep, and then you go to your 30-second chart. So if you're bullish, you're looking for a bearish liquidity sweep or like a sell side. So right here, notice how we were wicking below this swing low, wicked. I'm gonna just quickly show you guys, and this one right here. So tell me what is the significance between these? We had no body closure, and even if we had a body closure, it wasn't significant. Look, so there's unfinished business up here. we had a swing low, we had a body closure, then we had another body closure going up right above, right to the tick. Like we closed down and then we came right back up, indecisive candle, 30 second is already forming an entry right here, and then boom. Let's see the difference between to right here. So we had a wick, and then we had another wick right here, indecisive, indecisive, huge close. That's a market structure shift right there. Because the market is literally showing you, okay, we're not respecting the lows. So look, like when you view the market, it's going up because of this. We have a low, we make a new high, market structure shift. First of all, you can mark off the imbalances, inverted fair value gaps. Boom, inverted fair value gap in the discount range. The market is going up if we respect that. We respect it right here. We came down, green candle going up. Right here is another buy zone. You could be buying right here. You could be buyer. I wasn't a buyer because I knew it was going to consolidate and didn't want to get chopped up because my draw is still not hit. That's not my fault. So I'm playing my rules. So we know we're a buyer. We have a low right here. We have another low right here. Don't mind that low. Doesn't matter. That low doesn't matter. This low is higher than this low. Now we have another low right here, and we have another low right here, and then we make a low right here, consolidate. We look like we're getting another. We have another low lower, but then we have a huge displacement. Not a huge displacement, but this candle is definitely showing down. So I'm just trying to show you what's the difference between a liquidity grab and a market structure shift. Because right here, we grabbed it, we came back, consolidated. Right here, 30 second, 15 second, fair value gap right here, entry, boom, 1 to 8, 1 to 10. Another one right here. Came down, is your liquidity sweep. Came up, came down into OTE from right here to there. Boom, came all the way down. There's a 15 second, there's a 5 second, huge imbalance here that's getting held up. And I like that. Just we can just tell, not even having to go through the charts. But I'm just trying to show you guys what's a liquidity sweep and what's a, like right here. The market is going to keep generating higher prices by how it closes. So right here, obviously this is hindsight, but notice how we close right here. We have a down candle, immediately push back up. You can know right now, market's not done. It's reaching for something. Comes up, comes down, comes up. It's the candle closes that really matter, guys. Like right here. We have an undecisive candle. Then we have a market going up, closing, indecisive, keep going up. No down candles. Up, 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 up. Look at that. So we come down and we're already in. We took out external. We're going back for that imbalance, that internal liquidity, and boom. See 9% of my thing. So I don't think we're gonna go into, because my computer's about to die, but I don't think we're gonna go into the entry fractals. But let me know if you guys like this content, and if you guys learned, and yeah, and follow me. Hope you guys learned something. And yeah, have a good day, guys.